Hi, welcome to this video today, which is on the 26th of April. It's Friday, and we're just going to be looking at the euro, and we're going to be looking at it against the USD, the JPY, and the CHF, and we'll be going to the charts in a moment. Now, in recent weeks in our videos, we've been very bearish of the euro, and the euro has come down a little bit, but it's going to come down a lot in our view. Upside is just so limited in our view, and the market actually still remains very bullish of the euro overall. We take that as supporting our position and our view. Now, in terms of euro, plenty of downside. You'll see that when we get to the charts. Now, when I do the charts, I'm going to round up the big fundamentals behind the chart and the sentiment as well, and then just do technical levels of entry, stop, and target. So let's go and take a look at the pairs, but please do keep in mind when I'm giving my view. It is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical and sentiment analysis of 14 major Forex pairs, including the three we're going to look at now, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at Euro USD first, and I'm going to start very quickly with the weekly chart, and then we're going to go to the daily. All right, just on the Euro USD weekly chart, just very quickly see the big picture before we go to the daily chart and draw our levels of entry, stop, and target. Now, in terms of this chart, obviously you can see it yourself. The euro tops out into the 125 level, and yeah, the trend is down. Okay, what's interesting is when we break this 20-week moving average here, we get one brief move above it there, then back through. And since then, I just haven't been able to get through that 20-week moving average and hold above it. 3 tests there, just touch it and come off. 3 tests there, do the same. This one gets through but closes below. Again, a test. That one closes on. That one gets above, comes back below. Again, a couple of tests, then you get a reversal red there. 2 tests there. The 20-week moving average is holding rallies, and I'll come to this in a minute, but I view the euro USD as a really low risk short trade, one of the lowest risk of all in my view. All we need to see is volatility pick up to the downside, but in terms of resistance on the weekly chart, matches up roughly with the daily chart. It's the 113 level. Okay, so what you do is you've got blue there that bumps in, then you've got a red immediate reversal, test, down, back to test twice, down. We're now starting to move away from the 113 level. Okay, we're off the low. But yeah, we are going to see fairly shortly, I think, a big move down in the euro. Where are we going to go? We're going to go all the way back to 105. Okay, I'll get my line straight. So at the minute we're at 111.53 as I'm doing this video. So 105. So it's a good way down, is it? 653 pips or 650, let's say. And the risk on this trade is just very, very little. I'll explain why when we're doing our levels on the daily chart. So let's switch to the daily, do our levels of entry, stop, and target on the Euro USD daily chart. And we haven't had much volatility in the pair, but you can see when you get a rally, sells off. Rallies are just selling opportunities. This is big institutions hitting it. Okay, I'll explain why they're doing it in a moment. Some levels of entry, stop, and target. But the reason we're so bearish, actually, before I say the reasons why we're so bearish of the pair, I want to discuss this as well. Think percentages, not pips, in a moment, because a lot of traders focus too much on pips, not percentages. But in terms of why we're so bearish of the euro and see limited upside and a lot of downside, is these 4 points. I've labeled 2, 3. Sorry about that, but there's 4 points to go through very quickly. Interest rates favour the USD now and going forward. Really healthy interest rate if you buy US dollars. Okay, of course on the euro you've got a negative interest rate and stimulus as well, so you're picking up the carry. Okay, so you're making money every day, even if the euro isn't going down quickly, or if it rallies, it's cushioning you. Will that change that interest rate differential? No, I don't think so. A lot of people say Federal Reserve will lower rates. No, not if they look at the domestic economy. It's doing well. They'll just stay patient as they are on hold. Not raising, they'll just be on hold. The only thing that will encourage them to cut interest rates is basically if the global economic situation deteriorates. And if that happens and they cut rates, then the dollar's going to go up anyway because it's a safe haven currency. Okay. In fact, if they had to do that, it'd probably be more bullish for the USD, in my view. So this is a really big fundamental, okay, which is going to really limit euro upside. US economy doing better than Eurozone. It is way better. Eurozone is nearly in recession. Italy is already there. If you look across the media, you'll see everyone is worried about Italy. In recession, banking crisis, huge debts, real worry. Germany slowing up dramatically, the powerhouse of the zone, not far from recession. France is almost there. It's just not looking good in Eurozone. And to just show how bad it is, look at the GDP for the last quarter reading, just 0.2% growth. Now, we've got the next reading coming up early next week. They're forecasting, economists, 0.2% growth, the same as before. It could be even worse. Even if it's a little better, it's not going to make too much difference in the big picture. Just look at US GDP that came out today, 3.6. Just so far ahead of Eurozone. Now, why is sentiment so bullish towards the euro? I mean, I'm obviously very bearish. Well, the argument is basically unemployment is coming down. More people in the workforce means more competition for wages, which means basically as wages rise, people spend more, than the Eurozone miraculously recovers. A lot of people see it coming by the end of the year. Totally flawed argument. I've said this before. If you look at the US near enough full employment, way lower unemployment than Eurozone, and yet wage growth in the US is not strong. Okay, so why is it going to be strong enough in Eurozone to really power the economy? They're way behind the US in terms of reducing unemployment. So it's a flawed argument. There's just so many problems in Eurozone that I think it'll be going a lot lower, as I've said, and upside is limited. Now, in terms of these spikes, they're just sold by big money because they know the euro's not going much higher. They get some carry on the trade to cushion them as well. They just position themselves in and sell the rallies, and they'll keep doing it. Okay, and for me, that's a significant level. Just before I discuss this level, in terms of our trade, it's still the same in the member centre as in our last video. We saw this spike above 114, sold it back through the round number 113.80, and now we're down at 111.53 at the time of doing this video. It's just 230 pips, but that's not bad. And we've got the interest rate carry on our side, and we view this trade as low risk. Our stop is just back behind these tails. You see when we come up to this 113 level, get above it, can't really move away from it. Exhaustion, big red, another half-hearted rally down. So this is really significant resistance. Stop for us is behind the tails at 113.35, and you could sell a rally back to that level. I just don't think it's going to get there though. It could, but my own view is if you're looking to come in on this trade, you can sell a rally or a break lower. And in my view, if I just put my line there, sorry, I'm not very good at drawing a straight trajectory. My mouse is giving me grief. There it is, trajectory of the trend. And I've got 4 bodies there. So basically, big red comes down, 2 half-hearted blues try to rally. Red tail comes back up, but this red decisively goes away past the tail, and we're just down above the 111 level now. I think if you want to sell a rally, look to sell back to about 112.20, 30. It could run on, but I would just sell into this level, stop back behind here. Okay. Now, what about a break lower? This tail reversal here above that is just above the 111 level. Okay. So I would wait. Round number is very important. There's a lot of order flow around the round number, and to get through the round number, I think, is a good way to play it. So go 110.80. Get rid of round number turbulence, and then I think we'll be going down to those weekly support levels that we had earlier on. Now, if you did sell a break lower, you just put your stop back clear of the 20-day moving average and double trend line. Yeah, I don't know if I said it earlier, but if we're really bearish, we like to have a 20-day with double trend lines because we use the 20-day moving average as a resistance level as well. Where would you put your stop on a break lower? I'd go behind those two candles there, so about 112.50, 60. And you got a lot of downside. And if it doesn't move quickly, as long as it keeps going down, you've got that carry on your side as well. And when I say think percentages, not pips, okay? My own view is take a long-term perspective in a lot of the trades that I do. Of course, they don't all work out, but I'm not going to aim for just pips. I want a percentage gain, okay? This trade I'm doing just on low leverage in a family account where I've been told to beat the interest rate. So I'm taking a long-term view, just using 3-to-1 leverage here, okay? If I get to the par level, which I think could happen, within the next few months, it could come at any time. Yeah, I just feel volatilities could pick up generally across the Forex markets. That'd be a 21% return plus the interest rate on one trade. Now, in terms of this account, it's a low risk one for family. I've just got to beat managed investment money. But always look at the percentage that you can make on your trades and look longer term. And that makes you more patient with the inevitable noise you face on a day-to-day basis. And I think a lot of traders, they're focused on pips and hopping in and out and all the rest of it and the win rate. It's just not important. Focus on the big picture. Focus longer term. So for me, limited upside, a lot of downside. Right, let's look at another pair that interests me, which is Euro JPY. Euro JPY, just the just the daily chart. I won't do the weekly chart. I've just done my targets down here. 115.50, then 100. So a long way to go from here. 900 pips really to the first target, and obviously a lot more to the second. Now, those targets pretty ambitious, but in terms of you look at the sentiment and fundamentals behind the chart, it's easily, or those targets could easily be achieved. Okay, there's not much upside in the euro here either, in my view. Just lots of downside, upside limited. That's due to points 1 to 4 I've written up here. Now, in terms of the eurozone, we know it's not doing well for what we've just discussed. What about Japan? Well, first point to keep in mind is Japan, or the Japanese yen, is one of the cheapest G10 currencies. It's deeply oversold, okay? So it's so oversold, it's got little downside and plenty of upside. Both currencies have negative rates, so there's no carry advantage. Both got stimulus. In terms of stimulus in Japan, it will be reduced from current levels. It's a big stimulus package, okay? They've already made small tweaks, okay? They're very small, but stimulus will be coming to an end. And that's why most analysts, economists and brokers say, oh, the yen is going down, keep going down because of stimulus. Well, the bad news is priced in, okay? Now, in terms of, sorry, I spelled Japan wrong here. I think it's extremely important fundamental. Japan has huge investments in Eurozone. Japanese, the world's biggest overseas investors, 500 trillion is invested overseas, and a lot of it is in Eurozone. They hold 20% of the French bond market alone. They've got investments in other European bond markets, equities. Now things are deteriorating in the zone. Money's going back to Japan. Obviously, it has to be converted from euros to yen. That'll keep the yen fairly stable. It's not a big amount that's gone home yet, but more will follow, okay? Also, we've had risk on. That should really be hurting the yen. You had stock markets hit multi-year highs this week, but the euro's come down on the yen. The yen is the #1 safe haven currency of all, more so than the dollar. It's not being hurt by risk on. I think that goes with point 1. It's just so oversold. We get risk off, it will soar higher. And that's just on every other major currency. And I just do not see too much upside for the euro here, just plenty of downside. So how would you play it? In terms of the way we've been playing it in the member center, when she came up here, I started to find resistance. Okay, you can see it there. Have another go. Big blue tries to get through. Three small ones lose momentum. Down, down, down. Volatility is still relatively low though, but I just don't see that level being taken out. Okay, now in terms of the euro, it's a sell on rallies or on a break lower. So what about in terms of a rally? Let me just draw my line. That's my trajectory, which actually comes through those candles there, and the 20-day moving averages there as well. And then that level there. That is first resistance. You see I've done the two tails there. Body can get through. Big blue pushes off. Big red tries to hold and then decisively away. So that's, let's say, so it's about 125.70, something like that. You can have a look. Basically, I can't remember. It's been a long day, but yeah, I think it's around that level. But just up to there, she's a sell. We'll stop back behind here, and yeah, just don't see much upside. But you can also take a break lower, and the break lower is through here. It's a round number. The round number is always important, and we've held this one there. Here we've got brief pokes through, then now we're just hovering above the level. I would just sell through that tail there, clear the round number, so I would say 123.70, something like that. Just give her the round number turbulence and see if she runs. I wouldn't yeah, place my stop back here. If we break and clear this level, I put it just back, you know, behind this double trend line then. Okay, so yeah, if you're selling the rally, obviously you need to be there. If you're selling the break, you need to be behind here. 125.80 would do it in my view. Now you might be thinking I've ignored these candles over here on the left. That's sort of was thinking about today. These candles aren't important. It's just too long ago. Yeah, market isn't focused on that level there. This double bottom is significant anymore. This tail here is totally irrelevant. It was just a flash crash. Market was focusing on what's going on right now, and things have got a lot worse for the year. A lot better for the yen. I think 124 key institutions. We're looking for that to break, and I think if it does break, they'll take it lower. Okay, there's still all specs long of the euro, which I find yeah, I just find it surprising so many people are bullish euro, as I said earlier. But yeah, I mean, it's not much risk really in terms of the reward, you know. And in terms of yeah, I was saying earlier on about a low risk account that I'm running. I've got mostly euro USD, but I've got some euro yen as well. And you just see here, there's my target 115.50 first, then 100. Only 2-to-1 leverage, yeah? Is 17.2% to the first target, 40.1 to the second. It's a smaller trade, this one, okay? But you can see, yeah, just keep your eye on percentages. I think I said earlier, if you keep your eye on percentages that you can make to your target, you've got sensible stop loss protection. This risk rewards are really good on both these trades. Yeah, keeps you away from the market noise. So this one's, yeah, doing okay. We just really now need to see the breakdown, which could come at any time. Right, I'm going to look at the last pair now, which is Euro CHF. Right, so Euro CHF, just very quickly, I did a full video on this a few days ago. Now, in terms of the Swiss franc, it's a bit like a gentler moving Japanese yen. It's got negative rates, but it's a safe haven like the yen, okay? It's not as volatile. And in terms of the euro, obviously, for us, just sell big rallies in the euro. And this one here is a good one. Because the euro we're just so bearish of, and we like these sorts of trades whenever we see them. Nice big move up, high volatility on these outer Bollinger Bands. Just look for exhaustion. And we were looking at this level here, this candle tail, to see if it could be taken out. Okay. Now it was taken out in the blue, but you can see the blue exhaust. We just wanted to come in on weakness, so all we did is just use a very aggressive entry through here. Big red, nice red, blue, but exhausting a bit. Yeah, from our perspective now, this we're doing as a swing trade, not as a trend following trade yet, although we might turn it into a trend following trade. Okay, so basically I just don't see us getting through 114.50 now. Up here I'd sell, or through here I'd sell. Where are we going? Going to 112, I think. Okay, where the rally really sort of took off. Then we could go to 108. So about 560 pips from where we are now. So yeah, this pair here, a slower moving kind of Japanese yen and the Swissy. Euro, just, yeah, we get big rallies in the euro. I'm just looking to sell them wherever I can find them, basically. I've done this as a swing trade, but it could develop into a longer term trend for us. We'll see if we do get down to 112 and how prices perform around that level. So yeah, basically, obviously very bearish of the euro. Got some profit on the board so far. I'm looking very soon for it to hopefully become a lot more. Euro for us can break down at any time. It's that bad in Eurozone. Also, I mentioned it earlier, I think, but you know, if we get risk off, the three currencies we just mentioned being long on the euro, they will soar. So yeah, plenty of upside in our pairs, I think, hopefully, and limited downside. All good risk to reward trades in my view. Right, that is the video for today. Thanks for watching me as usual. Take care. Have a good day.